Why do you think we saw so much activism in 2018?
Well, Becky, we've had an environment where investors are looking at the companies that they own, and they have greater expectation that other investors are going to put their mouth where their money is and look and help create value. And the activists have raised significant amounts of money over the past couple of years. There's still hundreds of billions of assets under management in the activist sphere, and they need to put that money to work, and they look for underperformers. Activists are deep value research investors, and there's always going to be underperformers. These activists have been looking for years at situations, and when you have market volatility, you end up with targets.
Yeah, I was going to say, what happens in 2019, given the last few months we've seen in the stock market? I mean, underperformance is a very big relative term.
That's right.
Now what happens?
So with the volatility means that there are dips for potential buying activity for an activist, activists who may have been looking at situations for a number of years. In many cases, we found that our activist clients sometimes are looking at companies over a very long period of time with an expectation that they may be buying for a long period of time. And so they're looking at using a dip. They're looking at that as a way of accumulating their situation. And they're mindful of timing relative to market environment, relative to situational things that can come up at a company.
Meaning that a company that before may have been considered unattainable, or nobody was going to be able to get into the fortress, if your stock prices come down 20%, it's a different situation.
Stock price is a factor, but it's still an issue of looking at the value underlying that stock price. And while it may have been hard to buy certain companies, now you're seeing the opportunities change, and there are certain sectors, for example, where the valuations have come down significantly. If you look in the energy space, the price of oil is a significant factor in whether or not a company in that sector is going to perform. And somebody who's been thinking about which companies are doing it right and which companies may need the impact and help from an active shareholder, that's where you're going to see your targets.
Joe, it looks like you have a question. Joe Terranova?
No, I'm just curious if you're thinking about the prior landscape of activism itself. Do you believe that there's been this consolidation overall in the activism hedge fund community, and what do you think, extrapolating forward into 2019 and even 2020, that's going to mean for activism overall?
Well, there's certainly been winners and losers in the activist space over the years, and there have been some active activists who have gained a lot of assets, who have run with other investors and been able to raise more funds through pension funds, through other investors, and have had winners over time, and that's allowed them to consolidate.
So it was a much needed consolidation, you think?
I think there's a value to consolidation because there are larger and larger targets, and that requires activists who have a larger pool of assets to go and make that kind of investment. On the other hand, there are always going to be targets in the smaller cap space, and those will allow for small cap activists and break off activists and other firms to come in and make those kinds of investments. A lot of activism occurs in that space. That's not going to go away.